Good afternoon, everyone. Welcome to the Watchlist by Magenta Trade. Today is Friday, the 15th of July, and we are back with our regular YouTube live program, The Watchlist. I am Shan, joining you live from Sydney, Australia. At Magenta Trade, we teach you how to grow your portfolio using option trading strategies. We explain in simple terms how you can participate in the world-leading companies with a fraction of the amount that you would need as normal investment in the vast ocean of the stock market. There are plenty of opportunities to gain from the movement of share prices every day. However, market is unpredictable, volatile, and sometimes complex to understand. In order to be successful, you need a disciplined, rule-based approach developed over a long period of experience in the market and focused on building a long-term portfolio to protect your hard-earned money. With that, let's get started today and welcome once again. Good afternoon, everyone. Okay. Let's get started with our disclosures first. All our discussions at Magenta Trade are solely for educational and information purposes. We are not investment advisors, and you should consult a financial advisor before making any investments. Options trading involve exceptional gains, but at the same time, they pose inherent risk. Past results are no guarantee of future gains. For more disclosures, you can visit our website www.magentatrade.com. Just a couple of lines about me. I'm Shan, joining you live. I've been actively trading for more than 15 years, and I have turned my personal trading experience and passion into professional coaching. And we have formed this company, Magenta Trade, to help you out with my strategies of success in trading using simple terms and techniques. At Magenta Trade, we base our strategies on three dimensions of investments: long-term capital growth, building a retirement portfolio over a long period of time, generating regular income using stocks and options trading strategies, ensuring your capital is adequately protected against severe market downturns so that your hard-earned money is not wasted in adventure. Okay, there are a few earnings reports we published earlier in our social media channel. So if you're not following there, please do so in Twitter, Facebook, and LinkedIn. Search for Magenta Trade and like our page, follow that page or whatever channel it is. Let's get started with some of the earnings report that we published. United Health Group. United Health Group announced their second quarter earnings 2022 revenue of $80.3 billion, grew by 13% year on year with double-digit growth at both Optum and United Healthcare. Earnings from operations were $7.1 billion, growth of 19% year on year. Cash flows from operations were $6.9 billion, or 1.3 times the net income. Earnings were $5.34 per share. Adjusted earnings of $5.57 per share. The chief executive officer said the customers are responding as we build on our 5 growth pillars, enabling us to move into second half of 2022 with strong momentum, serving even more people more deeply. Andrew Whitty, the chief executive officer of United Health Group. Based upon the first half performance and growth expectations, the company increased its full year net earnings outlook to $20.40 to $20.95 per share and adjusted net earnings to $20.40 to $21.90 per share. Growth in the second quarter was balanced across the company's businesses, driven especially by continued strong expansion in people served at United Healthcare and in value-based arrangements at Optum Health. The next one we have in our list is Bank of New York Mellon, BK, and with that, they published their second quarter earnings. Total revenue of $4.3 billion, increased 7% year on year. Fee revenue increased 4% year on year. Net interest revenue increased 28% year on year. Provision for credit losses of $47 million compared with a provision benefit of $86 million in second quarter of 2021. Total non-interest expense of $3.1 billion increased by 12%, includes 4% increase driven by litigation reserves. AUCA $43 trillion decreased 4%, primarily driven by market values. Asset under management of $1.9 trillion decreased 17%, primarily driven by market values. Security services total revenue increased by 12%. Income before taxes decreased 25%, includes 40% reduction due to higher litigation reserves and provision for credit losses. Pre-tax operating margin of 17% or 21% excluding higher litigation reserves. Market and wealth services total revenue increased by 10%. Income before taxes increased by 9%. Pre-tax operating margin of 46%. Investment and wealth management total revenue decreased 10%. Income before taxes decreased by 36%. Pre-tax operating margin of 23%. Adjusted pre-tax operating margin non-GAAP of 26%. Todd Gibbons, Chief Executive Officer, commented, "Our second quarter results once again demonstrated the strength and resilience of our business model, and we are pleased that our board of directors approved an increase of the quarterly cash dividend on our common shares by 9% to 37 cents per share." Mr. Gibbons added, "It has been an honor serving BNY Mellon for over the last 36 years, and I retire at the end of August, confident that the company is in great hands." Mr. Vince commented on the financial results, reported revenue of $4.3 billion, up 7% year on year. Our results reflect the benefit of higher interest rate, the strength of our diversified platform, and our exceptional client franchise. We continue to see good sales momentum across most of our businesses, and healthy client volumes tempered the impact of lower market values. Okay, now we proceed to Citigroup, another earnings report. And at Citigroup, the results have been outstanding. Citigroup reported second quarter June 2022 earnings of $2.30 per share on revenue of $23 billion. Remember, their share price was only around $40. Out of that, $2.30 per share earnings, in just the second quarter. That's tremendous earnings. The expectation was $1.67 per share on revenue of $18 billion, and revenue grew 16.7% year on year. Okay, let's quickly look at the details of the earnings there. I'm trying to open up the presentation. Okay, quickly, let me have a look. Just give me a minute. Download that earlier. My apologies for that. But let's go to the other details. Revenue of $19.6 billion in the second quarter increased by 11%, driven by increased rates, client activity in markets. Operating expense of $12.4 billion in the second quarter increased by 8%. Citigroup cost of credit at $1.3 billion in the second quarter 2022, compared to negative $1.1 billion in the prior year period. Citigroup net income of $4.5 billion in the second quarter decreased 27% from a previous year. Okay, so let's move on to the market quickly, and let's see what's happening over there. Let me, if I can find any. Okay. Okay, overall a fantastic result by Citigroup. I'm just trying to find out if there are any other highlights that I would like to share with you at this moment. Okay, that's about it. We'll come back to you on later on that. Quickly. Okay, S&P 500 is up by 1.7%, so that has jumped, and it has touched um, almost the trend line once again. So I cannot extend that. I have to draw it once again. So that's fine. Let's do that. Maybe if I can do that trend line once again. Maybe I can a few touches. So this one probably the best. Let's see. Or I can just do it maybe a little bit here. Yeah, I'll just use the previous one. So it's almost touching the trend line over there. I'm a bit sketchy over there, but that's how that's what I mean. So overall, it's touching the trend line once again, and it is jumping towards the upper band. So yesterday, what we were discussing is that when the band narrows here, after that there is a significant movement. It could be in either direction. It could be in the positive direction, in the bullish direction. And once it's, let's say, cuts the trend line or maybe 30 days weighted moving average or other moving averages, then it can start, growing significantly. So that is a possibility. In either direction, it could grow exponentially. Now, at this moment, I would say that the DPO, detrended price oscillator, or DPO, is still in the negative zone. It is still below the trend line, and there is a strong possibility that it retreats from here. Now, depending upon a few factors, one of the important one is the Fed rate hike in the third week of this month, which is expected to be softened a little bit now. I don't know why, but there are strong employment numbers, and the retail sales today is reported good as well. Let me find out quickly the retail sales report. Okay, just give me 1 second. I'll try to find out the. So the retail sales report year on year, right? Month on month is up by 1%, whereas the forecast was 0.8%, and so that is a leap. Retail sales ex autos month on month is 1%, whereas the expectation was 0.6%, and retail sales ex excluding the gas and autos month on month is 0.7%, whereas last month it was 0.1%. So these are all month on month figures, and they are better than expected. So that's the retail sales. Now let's look at some of the indices as well. So yes, let's just finish up our discussion over here on S&P 500 or SPX. So what is from here now? Depending upon two or three things. First of all is the gas price. The secondly, the federal rate hike. It could be earlier the expectation, as I discussed yesterday was 100 basis points, but there is a discussion today that it might be a little bit softer. So if it goes a little bit soft, then the market would really rally from here. But if it is 100 basis points or 75 basis points, then probably it will again retreat from this level. These are the two possibilities. Now, the other factor is the earnings of the technology companies like say Apple and other big companies around that. Apple, Microsoft, and all the other companies that are going to announce their results in the next couple of weeks. So that would be the another determining factor whether the market is rallies or market busts once again. My guess, it could be in either direction, but in general, I feel that there is still probably a little bit of a downside possible, maybe another 300, 400 points. The reason being that the other, macroeconomic factors have not improved a lot actually. There are signs of recovery. There are signs of some growth in the market, but overall the recession fears are still there. And yesterday I was looking at some of the reports, and I think almost 90 to 100% of the analysts believe there would be a recession in the next few months. So, well, in the short term, maybe in next 3 to 4 weeks, it is possible the market rally a little bit, but then again, there is a strong possibility that it retreats from here. So, no new positions today. Just we have got some monthly expiry today. So, and that is another reason actually. Just before the monthly expiry of the options contract, the market actually, settles down a few, like number of trades. Obviously, all the traders, the big financial institutions, they settle their positions, a number of positions, and as part of that, it aligns with whatever is their benchmark. Now, in this case, as you can see, it is reaching the trend line. So maybe the settlement point is around that. So either, either the market can really start rallying from Monday onwards based on today's numbers from Citigroup and other earnings, or actually after settlement and touching the trend line today, and at the end of the day in trading, then it falls really sharp, because the settlement is over. The new settlement period starts from Monday. So that is a strong possibility that it retreats. So I will continue. I'm not just recommending anything. What I'm saying is I will continue with my bearish position on SPX, which is expiring on 29th of July and 5th of August. We have we discussed yesterday. We have got two open positions there in our paper trading account, and also they are actually in my personal trading account. So I will continue with those bearish positions. I'm not closing them as of yet. I may close Monday or Tuesday based on how the market opens on Monday, but at this stage, I'm not closing them, because I feel the market will continue the downtrend. Okay, but that is my personal opinion. It's up to the market what it does. No one can predict the market. Okay. Unfortunately, today I am not able to open my trading account due to some update issues in my laptop. I just updated my the antivirus software there, and there is a control probably somewhere, and I'm not able to resolve that issue today. So I could not actually trade in that particular IBCare account, and I'll try to fix that issue after this session. Meanwhile, let's look into the other indices. Okay, Nasdaq is up by 170 points, 1.5%. Dollar index is down by 0.5%, and Dow is up by 600 points. Dow has jumped 600 points. That's amazing. And that's all on the back of good or a stellar result from Citigroup. So I'll come to that. VIX volatility index is down by 7%, 7% from yesterday. Wow. So probably, one good result has turned things, a lot. Gold is down by 0.3%, silver is up by 1.3%, oil is up by 1.5%. Once again, euro is still almost at parity with the US dollar, and Bitcoin is above 21,000 currently. Ethereum is up by 4.7%. Let's look into individual stocks. Well, we looked at the Costco position. I could not confirm actually yesterday that it went through or not. Anyways, so that is, if you are lucky that you got into that Costco position, probably you got some profit today. Okay, let's look at the individual stocks. Citigroup is obviously up by 14.3% today after that, stellar good earnings report. Let's look at some other stocks. Okay, Wells Fargo. Let's see. Wells Fargo also jumped by 6.7%. So they also had their earnings reported today. Let me quickly go to that page. Wells Fargo reported their second quarter, June 2022, earnings of 74 cents per share on revenue of $18.4 billion, whereas the expectation was 77 cents per share. But that's all right. Revenue fell at 13.1% compared to the same quarter a year ago. Net income of $3.1 billion or 74 cents, as I mentioned. Results included a $576 million impairment of equity securities and $412 or 8 cents per share negative net of non-controlling interest, predominantly in the affiliated venture capital business driven by market conditions. Revenue of $17 billion, down 16%. Mortgage banking non-interest income of $287 million, down from $1.3 billion in second quarter of 2021. Business divested in 2021 accounted for $589 million of revenue in second quarter of 2021. Effective income tax rate of 16.4%, average deposits up by 1%, average loans up by 8%. So that's Wells Fargo. Let's look at some other shares. State Street Corporation up by 10.7%. They also presented their earnings report today. So if you can see here, $1.94 earnings, whereas the expectation was $1.73. So 12% better than the expectation. And the revenue is $2.95 billion. Okay. US US Bancorp up by 5.7% after their earnings report. Uh, Earnings were 99 cents per share and revenue is $6 billion. So in general, all the financials companies have actually jumped today, irrespective of their earnings. Like some of the earnings are negative, or you can say below expectation, but still the stock have jumped. United Health Group we already discussed. Right. Important news. One of the important news is the solar companies. All the solar companies are down today. Sunrun is down by 8%. First Solar is also similarly down. And the reason for that um, there is an NBC News report that said Senator Joe Manchin would not support a bill increasing spending to address climate change. So there is a news on that. So all these solar companies, First Solar is down by 9.3%. And similarly, Sun Power and Solar Edge Technologies also are down at this moment. They are not in our watch list, but we'll come to that. Uh, so almost all the stocks in our watch list are positive today. That's fantastic. Good to see. Advanced Auto Parts up by 1.2%. Apple is up by 0.5%. Accenture is up by 0.8%. ADI 3%. Amazon is up by 3.6%. Applovin is up by 6%. I'll come to Google. Citigroup is already up by 13. Berkshire is up by 1.4%. Blackstone is up by 3.9%. All you can see there, right? I no need to don't need to tell you all those. DocuSign is up by 5.5%. I am interested in Google. Google is not much up. Alphabet, Google is up by 0.98% only. Why I am interested in that is because their shares are going to split on Monday. So whatever the number of shares you have, if at all you do have the shares, the number of shares would jump by 20 times on Monday, because there is a 1:20 split of the Google shares. So if you got one share, it will become 20 shares. So recently I bought in the paper trading account and also in my personal trading account 5 shares, so that they will become 100 shares on Monday. And then I can apply the earnings strategy, option based strategy there, um, option based income strategy over there. So that's why I bought 5 shares, and they will become 100 shares. And once it is 100 shares, I can start using the uh, contracts, option contracts. Okay, so that's the idea for Alphabet. um, Market is there open for another hour. Let's check quickly at the volume. Okay, let's start with Apple. I just want to confirm the volume is much less, so that's probably another reason why I don't believe why I don't believe there would be a significant rally. The volume is not really high today. Okay, Apple is below the 10 days average. Accenture is below 10 days average, much below. Amazon, these are the big companies. So Amazon is a volume more or less same as 10 days average. Okay, Amazon is all right. AMD, much less than 10 days average volume. Let's say Tesla, the other biggie. Google, Google is also below the 10 days average. So nothing is average. None of these are above the average. I think of course, Citigroup would be much above the average. Um, Tesla is significantly below the 10 days average. Now let's look at Citigroup. Obviously, Citigroup would be above average, I guess, significantly. Citigroup, as you can see, the volume is significantly triple, 3 times volume. So that is understandable. Maybe where is that? Maybe I'll just. Why it didn't come earlier? Okay, I was trying BOC. Sorry, this BAC. Bank of America is going to announce their results on Monday. Um, Again, the volume is significantly higher than the average 10 days volume. So all these financial corporations or financial companies are above average, but other companies are still below average. So it depends upon how the result of the technology company goes. So that's the major reason. And then of course the Fed interest rate decision. So we have to look forward to those in the next couple of weeks, how it goes. It's better not to take a position today. Um, just because of the good earnings of Citigroup. Not all of them are great, but still there is a positive momentum because of the strong employment report and the retail sales. So those two indicators are really good, but at the same time the inflation is really scary. 9.1% earlier reported this week. That's really scary. I'm really scared with that. And not only it's in the US. Today I was looking at Argentina. The inflation is 60% in some places. In India, the inflation is more than 17% over there. So there are a lot of places where the inflation is really, really scary. Even in Australia, the inflation is quite high, around 8%, I think it was. Anyways, so with that, probably I'll take a goodbye today. Um, if you are watching today for the first time in YouTube, then please do subscribe to our channel. Please follow our social media channels, um, Facebook, Twitter, and LinkedIn, and continue your trading journey. Hopefully, you have a great weekend, and enjoy the rest of the day today and enjoy your weekend. See you back on Monday after today's monthly expiry of options. So do take care of your trade and see you back. My open trades with Apple and Salesforce, both of them are in the positive, and both of them are well above the short strike. So no problem. They are bullish positions. Market is up today. No problem. I'll let them expire. Thanks a lot for joining today. See you back on Monday.